Did you know you can secure your retirement account with physical gold and silver? My friends at SD Bullion can help you protect your retirement today. Just visit sdbullion.com/IRA. Well, greetings, GFMR. It's Tuesday, February the 3rd. It's time for your daily podcast. Really solid day, obviously, today, which actually we hinted at in last night's podcast. If anything, because it looked like, okay, we're probably done with the selling, but also had that late day uptick. The last 10 minutes or so of New York Stock Exchange trading saw a really nice, like 75-cent bump in the GDX. It took it all the way back to completely unchanged on the day. Remember that yesterday? And that did bode well. Right out of the chute last night, 6 o'clock Eastern, silver and gold took off, rallied again in Shanghai, then fell back, and then rallied overnight. And even though they were under pressure again during the COMEX session, we ended up with a very solid day. Good news is the GDX rallied in the last 10 minutes today, too. About 50 cents in the last 10 minutes. I don't know. Does that foreshadow something good tomorrow? We'll see. All sorts of interesting geopolitics going on. We have scheduled news tomorrow with the ADP jobs report, 8:15 Eastern, followed by the service sector PMIs at 9:45 for the S&P version, and of course the all-important ISM service sector PMI at 10 o'clock Eastern. I'll have a post for you in the morning, but it might be kind of brief. I think I mentioned last week I had recorded live from the vault with Andy last Wednesday on my birthday, right near the peak. And it's scheduled to be shown this coming Friday. So I reached back out to Andy and I said, you want to kind of update that? So we're going to have a little post smash update that we got to record tomorrow. And then the whole episode will be out Friday. I'm sure you'll all will see it. Anyway, great day today. Really solid bounce back with the dollar going back down about 25 cents. Gold as low as 46.81 before going to 5,018. First hit 5,000 back on January 22nd, not even 2 weeks ago. Feels a little different now, doesn't it? So anyway, I've got some interesting charts to show you that relate to that here in a few minutes. Anyway, I got a last. Oh, actually, first I should tell you, after 5,018, then with the stock market melting down and Bitcoin melting down, everything going down, gold went to 49.03. It's like, well, that's kind of a bummer. But right now I got 49.74, which is back up $322 on the day. Silver low last night, 79.14, right at the reopen. Went all the way to 89.06. One point is like up 15% on the day. Fell back to 82.5. But right now I got 85.30, which is up $8.30 on the day. Copper up 4.5%. Platinum up nearly 6%. Palladium up 3%. Crude oil back up 3% with those geopolitical concerns again. But stonks were down. S&P down almost 1%. So we're kind of fighting that all day. And then the shares. The GDX opened higher, gapped up, hit a high of 99.99. Can't make this up. Then fell, and then re-rallied to finish 98.22, up 403 on the day. And again, up 50 cents just in the final 10 minutes. So hopefully that's a good sign. You know what I know for sure is a good sign is the plunging open interest. Now, again, in gold, the February contract going off the board and making deliveries, that's always going to drop the open interest, right? But what's nice is when it gets all washed out, there's really nothing left to root for but upside as speculators come back in. We talked about this yesterday. When gold was down to its lowest open interest since December, remember back in December, like, okay, as that spec interest comes back in, that's going to push price back higher. Well, guess what we got down to yesterday? Down 14,000 yesterday on the follow-through selling. Down to 414,000 776. That's the lowest open interest since June 9. Again, we'll show you that chart in a second. Silver, even more compelling in that regard. Down $1.50 yesterday, follow on to Friday. Down 5,600 contracts of open interest. 142. 368, the lowest since May the 20th of last year, over 8 months ago. Now, I got some charts we'll walk you through in a minute and lay all this out for you. But this is always a good sign. Now, we'll see how much came back in today. Probably not much, probably not a short covering today. And then we'll see what the COTS look like, because today, obviously, a COTS survey day. Also, a bank participation report coming on Friday, too. All of that will be very interesting. Make your Friday podcast a must listen, at least in my mind. So anyway, a lot of good stuff today. Now, we'll see what happens tomorrow. We'll see if Shanghai can continue to bounce back despite, all the pressures we've seen there with margin hikes and fund closures and all the rest. But, if anything, we'll just see if we can keep things from getting worse. And sometimes that's the most important, particularly as it relates to the shares. Earnings season, if I remember, going to start on the 12th, which is next Friday. I believe that's right. I'll confirm it before I bring it up again, but I think that's right. Newmont, then that's AEM. Newmont then comes first part of the next week after the President's Day holiday here in the U.S., and then, then the floodgates just open. Again, the comparisons, fourth quarter versus third quarter, 2025 versus 24 are going to be outrageously strong for almost every single producer. So, just going sideways with the metals should allow the shares to rally in the weeks ahead. And so sideways is okay with me. Again, we're talking $5,000 gold here, and yet people are running around like, oh my God, the sky is falling. I'm sure that'll be the next thing. I'll have trolls until we get back up over $5,600 gold later this year. There's going to be all these trolls claiming that I was the one that told them to buy gold, on my birthday at $5,600. It's all my fault, of course. Anyway. All right, what do we have on this page? I got a number of different things on this page today, so we might as well just dig in. We'll start with the stuff we normally start with. How about some images? How about this one? As a reminder of where this is all headed, as a reminder of your macrocast, this great reminder from Luke Groman. Why did Besant say this? And how is it true? Besant, back on October 22nd, gold price rising has helped us substantially. Remember that? I wrote about it then. That's when it was like an impromptu little press conference he had right outside the gates of the White House. Gold price rising has helped us substantially. What do you think he could be talking about? And as Luke Groman says, this is something just got glossed over, thrown away. Nobody even remembers it. Yeah, I remember it. It's going to be an important part of where we're going through this year. And again, remember, Warsh is a hawk. Okay, Trump picked Mirren to be a Fed goon to take over for what? Who was it? Goon Kugler in her corruption? And Mirren said he was only going to stay to January, but he's got the seat. He can stay as long as he wants. Mirren, Fed needs to cut rates by as much as a full point this year. Trump appoints Mirren, said we're going to cut a full point. But Trump appoints Warsh, and Warsh is going to be a hawk. Give me a break. What a joke. But that was enough to smash the metals. Okay, like I said, geopolitics. Bubbling up again. U.S. shot down an Iranian drone today. Iranians made some moves on a tanker in the Strait of Hormuz. Then again, this other stuff with Trump. Goals ahead of this week's talk. But wait a second. I remember when all these people were dying in the streets, Trump saying, hey, keep going. We're going to hold all these people accountable. We'll be there to help. And now it's just all about the nuclear program? Whatever. Okay, this is interesting. Remember the flywheel of the GLD and the SLV? We've talked about this a million times here. Authorized participants are the bullion banks, the metals held in London. The banks, if they've got to absolutely have metal, just short the shares, withdraw the metal from the ETFs. They feed it into the market in the hope that at some point the price comes back down. They can rebuy the metal and they can put it back in. What happened? Largest one-day drop in silver's history. The next day, say you saw 36 million shares created in the SLV and 33 million shares put back into the fund. There you go. There's your flywheel. Take it all out, deliver it as much as you can, then you shake some loose on a big price smash and put it back in. I don't know what this will do to lease rates. Perhaps we'll get an update from David Jensen on that sometime soon. More from Robert Friedland. Hopefully you saw that great little, statement he made in the Oval Office with Trump late yesterday about this metal stockpile. Anyway, this is a big deal. This was all part of the bounce back today, for sure. And then finally, just this little screenshot, Michael Oliver, who graciously comps me his subscription, because I guess I've helped him over time. Anyway, he sent this out this afternoon. I, of course, wouldn't give you the full report. That wouldn't be very nice to me. But I thought you all would appreciate these numbers, what he said about silver. We can get back above 92.38 this week, or finish next week above 90. And it will start to look like, again, this was just a blip on the radar. Okay? All right, so here are some interesting charts. Not your daily charts. We'll get to those in a minute. First, these 5. First one is the July silver from 2011 compared to the March silver of 2026 with the 20-day and the 50-day moving averages. There are some similarities. Right? Okay, sure, fine. Price went in the last month, in April of 2011, from 38 to almost 50. That's what? 30%? The last month, we went from 70 to 115. What's that? 50%. All right. Kind of rolling over and topping for 5 or 6 days. Kind of rolling over and topping for 5 or 6 days. But then notice the difference in the plunges. Now, if we have just another massive red candle tomorrow and silver goes down to 65, you'd have to be a fool to not think, oh boy, we got trouble on our hands. Now, I'll remind you, because I lived through it, the price in 2011 stabilized and mostly traded higher in the 30s and the 40s, deep into 2012. Until we got QE2 or QE3, I guess, and Operation Twist, all that crap, and the dollar took off, and silver then finally plunged. So even if 2011 is an analog, well, there's no reason not to think that silver wouldn't at least go sideways for a year. Up here between 80 and 100, 110. Okay, that's to me, kind of a worst case scenario. But let's see. Again, huge plunge, exacerbated by a number of factors on Friday. Okay, totally different from what happened. Totally different from what happened in the first week of May of 2011. Additionally, I think you could probably say the fundamental picture is a little different than it was in 2011. But since you're going to get more and more of this discussion, I thought I'd give you that chart. All right, here's the OI chart I was telling you about. If you go back to June 9th of 2025, open interest was about 414,493. And price back then was 33.26. As of last night, open interest 414,776. For all intents and purposes, the same. Open interest $1,350 higher, or price $1,350 higher. You can also see the ebbs and flows along the way. All through the summer last year, open interest just kind of oscillated as price did. And once price took off, open interest went up by 50,000 into October. And then as price pulled back and consolidated and the December contracts went off the board, it bottomed out at 418,000, which is about where we are now. Before rushing to the high 2 weeks ago at 555,000. And now, like I said, with the February contract going off the board, no full rolls, we're back down to 414.76. Okay? The only way you're going to get further now down is new open interest that's all on the short side coming from the spec side, and we know that's bullish. So I think this is a pretty compelling chart to suggest that gold's gone down about as far as it's going to go. And as you know, it's been rallying 20% and going sideways, rallying 20% and going sideways. Well, now we're going sideways again for a while. And the silver's the same thing. Yesterday, 142,368. That's the lowest since May the 20th. May the 20th, the price was 33. Okay? So, again, to have this low of open interest, while not the be-all, end-all, is certainly a positive. And then I told you we'd go back and use the whiteout. Remember I used to do this back in the early days of TFMR when I would print off the charts and mark them up with a ruler and a Sharpie. Sometimes it's like, yeah, you got to use some whiteout to gain perspective because that candle is so ugly. I'm not saying the candle doesn't matter, and I'll show you the actual daily chart in a minute. But sometimes that candle is so ugly that you're like, damn, I just can't. What would this chart look like if it didn't have that? So what if silver's rally in January or gold's rally first up was a little more normal, about to what we expected? Remember the 20% extension above 4,400. My target was 5,200 before the next consolidation, and then the next target would be 6,000. It's all in the macro cast. We've mentioned it a million times. Well, what if that's all the farther gold had gone? Chart would look like this. Now, I kind of drew it. I didn't mean to draw it with what looks like a little bull flag. But if the chart looked like this, came down last week to the 20-day, briefly sold off yesterday, found support at the 50-day, and now is back up above the 20-day, you'd be like, damn, okay. Just a little 5 or 6 day washout, but instead you see the big red candle, you go, oh, God. I'm not saying the red candle didn't happen, but if that's just total speculative surge craziness the last week of January, from the 22nd to the 29th, if that hadn't happened, if we just had kind of just, lollygagged along and it looked like this, would you feel differently about it? How about silver? Same thing. Silver just blasted out from 95 up to 120. Well, what if it had peaked at 100 and then just ran into resistance there, like you kind of would have thought would have happened? You still have, as I drew this, a big plunge last Friday, but you're finding support at the 50-day. The next thing you look for is just a move back up over the 20-day and then a move to new highs. So why can't we look at it that? Why can't we say, okay, well, our next target is get back over the 20-day and let's see if we can get back to 100. I think that's a perfectly logical way to look at the rest of the month. So, again, the charts are the charts. But sometimes those candles are so dramatic, it skews the way you look at it. And that's what I always thought was the value of using a little whiteout. Finally, your daily charts. Dollar index back down today. Again, big rally on Mirren from 96.30 to 97.70. Back down today. And again, undeniably trending lower. I mean, look at the 20-day and the 50-day. Bearishly crossed and trending down. That would help us as we go through this month as well. The actual gold chart, okay, still holding the trend line, still holding the 50-day, now back above the 20-day. Again, I think your next target is 5,200. That doesn't mean it's going there tomorrow. It might. Doesn't mean it's going there Thursday. It might. But why wouldn't it? I mean, look at like when we peaked out in October, okay? Fell sharply, and then just kind of came up in the middle of November, back up to 4,300. We were still well off the highs. People go, oh, lower high. Oh, no, and we just kind of gradually trended higher. That's exactly what I would expect now in this consolidation phase, up to 5,200 and then pull back. And you know what I'm saying? Why wouldn't it continue to trace out that way when that pattern has been so predictable? Take a look at silver. Now, this is a little more worrisome, right? 2 days in a row, we've been unable to get back above the trend line that we've been following. But who's to say that's the perfect trend line? But that's just the one that has been working. We do get back above that trend line. We're also then going to close above what Michael Oliver wants to close us above on Friday. So we'll see. But for now, just like back in August and again in November, we just found support at the 50-day. That's a really ugly candle. No doubt about it. But that's, the value of that whiteout every once in a while is you're like, okay, well, if we just said, if that last blowout above 95 and 100 hadn't happened, how bad would this look? I mean, it looked like, okay, just another correction, just like we had in October and just like we had back in April. And finally, the GDX. I drew this trend line a little bit differently today, but I think that's pretty good. It's filling back up now, moving toward filling that gap. The target is about 104. I've got 10 GDX calls. I may or may not take them off, but I think that's where we're going, up to about 104 and fill that gap and then kind of oscillate some more. See if we can't get above that 20-day on a daily closing basis. We were in today above it when we got to 99.99. We closed at 98.22, so we're still below the 20-day. We get back above the 20-day, we're filling that gap for sure. And again, I'll just remind you, we're talking 98. Wasn't that long ago, the GDX was 38. Okay? So we're doing okay. All is not lost. All right, that's it. Hope you enjoyed this podcast. A little different set of charts than normal. Still kind of fun. We'll see what tomorrow brings now. Hopefully, the late day price movement is a good sign for tonight and into tomorrow, but we'll know soon enough. Hopefully, the open interest washout's a good sign for this week and next. We'll know soon enough. Anyway, we'll be here to write about it and talk about it tomorrow. Hope you have a great remainder of your day. Thank you for listening, and we'll see you tomorrow. It's your pal Turd Ferguson signing off, and I'm out.